There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Great to have your company on a day where we sort of had a bit of a choppy seesaw, if you like, day's trade. Let's have a look at where we are finishing. And in fact, a little bit more buying coming through on the CBO 200 there towards the close of trade. Having a look at the ASX 200, we've also ended in positive territory on that index, up by 13 points or 0.1% to 8,772 as we head into the match off. But where we have seen some positive momentum, of course, has come through from the miners. A lot of reasons behind this mining momentum. You've got oil prices higher, global oil prices climbing around 3% to a 7-week high overnight. We've seen the likes of Karoon Energy have its best day in months. We also just spoke to Finder Energy. Fascinating interview we'll have up on the website soon about that small cap in WA, soaring more than 100% on a tie-up with Timor Leste. And elsewhere you had, of course, that big move coming through in copper as well. We're just continuing to see these concerns over what's happened at that mine in Indonesia, but you've got the likes of Sandfire, Capstone Copper, absolutely rocketing higher. To the other side, though, was weakness pretty much everywhere else in the market. So that has why we have been seeing a little bit of a seesaw trade. And then also, of course, we've got this climate claim as well from China, really trying to lower their emissions targets by 2035. This coming from a video call from President Xi Jinping at the United Nations. All right, let's have a look at some of the sectoral moves then. Kicking it off, of course, have we got the sectors? Maybe not. But of course, those big copper moves. But if we look at some of the top stories of the day as well, then what we actually saw was the likes of Premier Investments up there, posting a more than 30% increase in full year profit to $338.2 million. But of course, that was related to the sale of apparel brands. When you strip that out, the operating, continuing operations, so that's Peter Alexander, Smiggles and the like, was actually a drop there in profit, but it was better than what the market was looking for, and I think that's why we're seeing the share price reaction. Woodside Energy there also in focus. It's teamed up with 2 Japanese partners to develop a supply chain for liquid hydrogen between Australia and Japan. Macquarie Group also in focus. Macquarie Investment Management will pay back its thousands of members who invested retirement savings into the failed Shield Master Fund. Now, this is due, they say, to be paid by Tuesday, but of course, they're also saying that, you know, it could take years for them to recover the funds through the liquidation process. Macquarie also planning to tighten oversight on its super investment platform to avoid a repeat. Liontown Resources there, a little bit weaker. It has tripled its annual loss to $200 million amid the global downturn there in lithium prices. And we also saw that the ACCC set down October 9 as the new date for a decision on Agribusiness Group Elders' proposed $475 million acquisition of Delta AG. Shares, though, up by about 0.8%. There you see some of the mining players, of course, amidst all the momentum that we have been watching. BHP up by about 3.5%. And looking at some of those industrials, also just worth noting that we have heard with regards to SGH there that the chair will retire next year. That, I believe, has just sort of hit the ASX statement. So we'll get a little bit more on that. Terry Davis to retire early next year, along with non-executive director Annabelle Chaplin. Mark Johnson will replace her as interim chair of the company's Audit and Risk Committee. And SGH shares up nearly 9% this year, trading around $50. And we're also, of course, looking at that big run-up that we've seen in energy. I mentioned Woodside's tie-up there with a couple of those Japanese players. Karoon there up by about 6% as well. All right, let's welcome our guest to the COB. Jimmy Jang joins me. Always good to see you, Jimmy. What did you make of today's sort of choppy action?
Of course, like you just basically mentioned, the miners are obviously now really coming back, and we're seeing a lot of opportunities in the copper space. As you mentioned, Juliet, definitely a worthwhile the space to explore. Some of the names that we'll probably like in a micro cap to small cap space is TechGen. TG1 is a ticker. They're doing some, they really did a good placement recently, and also, topping up their cash position with the additional top-up placement as well. So really good kind of momentum that we're seeing in this space at the moment. And I think that's what you kind of also, briefly mentioned as well, Juliet. There's a lot of profit taking that's happening in the gold space. So we must see that a little bit of an opportunity for some of these gold companies that we could potentially re-enter and top of it up, and all for those people that's been kind of waiting for the gold prices to kind of calm down for a bit. So really good kind of market for the people that's been waiting on the sideline for a little bit with this for this market to kind of cool down. And we're speaking of cool down, we obviously saw in the US, we've seen the Nvidia slipping again. So the market in the US been kind of slipping for the last 2 days. And at the same time, the Fed Chair Powell also reminded that there's no kind of risk-free path on inflation, and that the valuation are fairly high. So this could also be a signal that we see it be a weaker trading session tomorrow as well, but we'll kind of see how it all plays out.
Yeah, and when you are talking more broadly about what you're seeing in global markets, you were saying Bitcoin is also looking quite optimistic here.
Yeah, and look, in this kind of like current environment, we kind of want to get an exposure that will actually get us to the macroeconomic scale. And, Bitcoin, spot prices remains kind of tied to that macro policy and the institutional flows. So if we kind of take a step back, since early 2024, the US spot Bitcoin ETF have kind of attracted over $54 billion in net inflows. And though there's the third quarter, we saw some of those outflows as investors took profits, as we kind of expected. So that sustainable kind of positive inflows will underpin that price stability and momentum. And because markets is also expecting another 25 bit rate cut by October, that will add that liquidity and the weight on the US dollar, which is obviously very supportive for Bitcoin. So on top of this, we're obviously seeing the consistent sticky inflation and the partly tariff-driven, macroeconomic risks, and also keeps that hedge narrative quite alive for commodities like Bitcoin. So it's almost that stagflation-like backdrop that slowing growth, persistent inflation, and kind of in that context, Bitcoin is increasingly viewed as that non-correlated asset. So in Australia, we got a lot of ETFs out there. CRYP is another great one to get an exposure from, but Bitcoin is probably a good one to slowly allocate into your portfolio before the October Fed meeting coming up soon.
Getting back to our market, I mean, a lot of momentum today. I talked about what was happening with copper and the like, but there's a stock that you've been looking at, Ameria. You talked about this with me a little while ago when it was around 4 cents. It's now 6 cents. What is it doing? What do you still like about it?
Absolutely. Look, before we talk a little bit more on the Ameria, again, let's kind of a little bit focus on the macroeconomic scale. Just overnight, we saw Thai life sciences in the US jump almost about 15% on their positive phase 2B results for its psychedelic depression therapy. So that kind of reaction shows how much capital markets is rewarding those innovation in mental health. And what's really interesting about Ameria in Australia is they're already kind of in that operational. It's not years away. It's basically all ready to go. So it's delivering that insurer-funded programs for treatment-resistant depression and PTSD in partnership with Medibank a couple of months ago. So the big difference between what Ameria is making from their global peers like a Thai Life Sciences is the timing and commercialization. So unlike, let's say, the Thai Life Sciences or MindMed, or for example, in the US, they're still in that clinical trial phases, which means they're pre-revenue. Whereas in Ameria, they already have 2 insurer-backed programs live in Australia, and their treatment plan is worth between 20 to 30 Australian dollars, which is kind of creating that immediate repeatable revenue. So with a market cap of only about $36 million, it looks obviously very deeply undervalued compared to there's the Thai Life Sciences, which is roughly around 480 million US dollar market cap, to about 1.2 billion dollar market cap for the other peers as well. So valuation looks really cheap. It's kind of on a roadmap to being commercialized. So what else can you ask for a company like this?
Yeah, and it's a really good one that you picked a while ago, Jimmy. More broadly, as we get close to the end of September, what have you seen? Obviously August was really good. I think we were up something like 3%. I'm just looking at what the ASX is up over the month so far, down 2.2%. So given back a lot of that, what has been your overall take, and what happens in the final 3 months of 2025?
That's a great question, and that's a question that I've been kind of asking with my clients for a while. It certainly is a really interesting market that we're seeing at the moment. If we kind of look at in the US, we're seeing markets all-time high, and then the Fed is already starting to cut rates by at least 5 rate cuts in the next 12 months. So I think we need to have 2 kind of different thematics here for the investors. It is a good time to slowly take some profit off the table if you are significantly up with your capital gains in certain stocks. So for instance, companies like in the banking space, for example, it's probably slowly good time to make sure that you do de-risk yourself from that kind of exposure. But in Australia, for example, we are very, very happy with the valuation of the minerals company. So, with these kind of minerals companies being significantly undervalued for the last 2 years, this is probably the best time to start getting in, because we are expecting that rate cut coming in both US and also in Australia as well. So, if you look at the some of the data that's slowly coming out. So, for example, in August in the US, there's new single-family home sales has actually surged 20.5% month on month, which was very far above expectation. And you're obviously showing that resilience in housing. And if you look at some of those companies like James Hardie, for example, that's been hit really hard with their forecast, this could potentially be an opportunity. So there's a lot of opportunities out there because we've been hit quite hard in a certain sectors. So it's probably a good time to slowly take some profit off in the other sector that's been showing some good results into these undervalued sectors. And we should be very good for the next 12 months.
All right, Jimmy, always appreciate it. Thank you so much for your time, Jimmy Jiang from GBA Capital. Well, the stock of the day today, it was a US special, so it was Alibaba, the nicely listed Baba CDIs. We heard from our expert Mark Morland from Value 3, Mark Gardner from MPC Markets.
It's been through the hard times and it now seems to be taking off. It's 1/3 of the return of Amazon for the same period. So if you look at Amazon by comparison, I think it's the best comparison point. Amazon's done $78,000 for your $10,000 investment for a 24.3 compound return per year. And their EPS growth rate has averaged 37% per year over the last 5 years. And they're on a PE of 33. Alibaba's on a PE of 18, so it's half the PE. And I would argue that their forward earnings growth will probably be higher than Amazon because of their positioning and where they're at now and the growth. Who knows? But I wouldn't buy it. I'd rather buy Amazon. And did I mention their return over the last 10 years, even with the ups and downs, is 22,000, which is 12%, which effectively you've doubled your money in 10 years, which is 1/3 of what Amazon's done. With Amazon, you don't have a political risk, arguably.
I think it's worth the risk at the minute, and but just be mindful that it's like there's a lot of gold miners that are that look extraordinarily cheap on your screeners, and then you find out they're in Sierra Leone, and they could be repurposed by the government at any moment. So you've got to take that into account. So you'd probably I'm going to say it's a buy, but you would be lighter than
sovereign risk hangs heavily on the stock.
All right, the marks there on the Baba ADRs. Let's have a look at what we saw in the leaders today. All about those copper and energy players. Capstone Copper up 10.2%. Sandfire up almost 8%. Karoon Energy, we mentioned, having one of its best days in quite some time, up by 6%. Rio Tinto and Beach Energy also looking good. To the downside, there was some weakness in Catalyst, Terra. We had that on the call yesterday. Deep Yellow, West Gold Resources and poor old Fisher and Paykel falling 5%. In the small end of town, Trig Minerals was up by an impressive 38%. We should also point out that we talked about Finder Energy. You know, it was on the 3 p.m. show earlier with Andrew, that more than 100% skyrocketing coming through in that company. Let's have a look at some of the laggards though. Invictus Energy was down by about 26%. Adore Beauty also being hit a bit today, down 9% to $1.09. Now tonight, a fair bit out, in fact. The US GDP, durable goods, initial jobless claims, existing home sales, and then some big ones in terms of having a look at how the overall global economy is going, with Costco and Accenture issuing their earnings. Tomorrow across the region, New Zealand September consumer confidence, Japan September CPI. Locally, not much happening, but SIG Global and VRS will trade ex-div. Let's have a look at where we finished up. 1% on the SIBO 200. I don't think it was quite that gain on the ASX. In fact, just 0.1%, 8.5 points, 8,773 points is where we finish on the ASX 200. Of course, those copper stocks really driving it home, and it was all that mining momentum that lifted us higher. Energy up 2%, materials up 1.6%. Elsewhere, though, big falls in consumer staples, industrials, REITs, healthcare, and the financials off by about 1%. We will do it all again tomorrow from 9:45 a.m. Eastern. Join us then.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.